Developed by Thomas Asprey in 1986, the MACD histogram measures the distance between MACD and its signal line, which is the 9-day EMA of MACD. Like MACD, the MACD histogram is also an oscillator that fluctuates above and below the zero line. Asprey developed the MACD histogram to anticipate signal line crossovers in MACD. Because MACD uses moving averages and moving averages lag price, signal line crossovers can come late and affect the reward-to-risk ratio of a trade. Bullish or bearish divergences in the MACD histogram can alert chartists to an imminent signal line crossover in MACD. Standard MACD is the 12-day exponential moving average, or EMA, less the 26-day EMA. Closing prices are used to form the MACD's moving averages. A 9-day EMA of MACD is plotted alongside to act as a signal line to identify turns in the indicator. The MACD histogram represents the difference between MACD and its 9-day EMA, the signal line. The histogram is positive when MACD is above its 9-day EMA and negative when MACD is below its 9-day EMA. The MACD histogram is an indicator of an indicator. It is designed to anticipate signals in MACD, which in turn is designed to identify changes in the price momentum of the underlying security. As with MACD, the MACD histogram is also designed to identify convergence, divergence, and crossovers. The MACD histogram, however, is measuring the distance between MACD and its signal line. The histogram is positive when MACD is above its signal line. Positive values increase as MACD diverges further from its signal line, to the upside, and decrease as MACD and its signal line converge. The MACD histogram crosses the zero line as MACD crosses below its signal line. The indicator is negative when MACD is below its signal line. Negative values increase as MACD diverges further from its signal line, to the downside. Conversely, negative values decrease as MACD converges on its signal line. Chart on the screen shows a stock with MACD and the MACD histogram. A bearish signal line crossover occurred in late September, turning the MACD histogram negative. A bullish signal line crossover occurred in early December, turning the MACD histogram positive for the rest of the month. There was a period of divergence as MACD moved further from its signal line, look at the green line, and a period of convergence as MACD moved closer to its signal line, look at the red line. The MACD histogram anticipates signal line crossovers in MACD by forming bullish and bearish divergences. These divergences signal that MACD is converging on its signal line and could be ripe for a cross. There are two types of divergences, peak, trough, and slant. A peak-trough divergence forms with two peaks or two troughs in the MACD histogram. A peak-trough bullish divergence forms when MACD forges a lower low and the MACD histogram forges a higher low. Well-defined troughs are important to the robustness of a peak-trough divergence. Chart on the screen shows Caterpillar, CAT, with a bullish divergence in the MACD histogram. Notice that MACD moved to a lower low in June to July, but the MACD histogram formed a higher low. There are two distinct troughs. This bullish divergence foreshadowed the bullish signal line crossover in mid-July and a big rally. Chart on the screen shows Aeropostale, Aero, with a bearish divergence in August-September 2009. MACD moved to a new high in September, but the MACD histogram formed a lower high. Notice that there are two definitive peaks, higher, with a dip in between on the MACD histogram, red line. The subsequent bearish signal line crossover foreshadowed a sharp decline in the stock. As its name implies, slant divergences form without well-defined peaks or troughs. Instead of two reaction highs, there is simply a slant lower as the MACD histogram moves towards the zero line. A MACD histogram slant towards the zero line reflects a convergence between MACD and its signal line. In other words, they are getting closer to each other. Momentum shows strength when MACD is moving away from its signal line and the MACD histogram expands. Momentum weakens as MACD moves closer to its signal line and the MACD histogram contracts. Contracting MACD histogram is the first step towards a signal line crossover. Chart on the screen shows Boeing with a classic slant divergence in the MACD histogram. MACD moved sharply lower after the bearish signal line crossover in June 2009. MACD moved to a new low in mid-July, but the MACD histogram held well above its prior low. In fact, the MACD histogram bottomed towards the end of June and formed a bullish slant divergence. The thick red lines show the distance between MACD and its signal line. It is sometimes hard to gauge distance on the chart, so these lines highlight the difference between 26 June and 8 July. This slant divergence foreshadowed the bullish signal line crossover in mid-July and a sharp advance in the stock. Chart on the screen shows Disney, DIS, with a bearish slant divergence in May 2008. Notice how MACD continued to a new high on 16 May, but the MACD histogram peaked on 8 May and formed a slant divergence. The advance in MACD was losing momentum and the indicator moved below its signal line to foreshadow a sharp decline in the stock. This chart also shows a nice bullish divergence in March to April.